Welcome to your single source for insight, inspiration, and unfiltered conversation in financial services. In each episode, we'll talk to the disruptors driving innovation, unpacking the market trends, strategies, and the stories behind the numbers. Follow and subscribe to stay at the forefront of global finance.
Hi, and welcome to the Single Source Podcast. I'm Heather Zumarraga, and I'll be your moderator. Today, we're unpacking a big question for global asset managers. How can you successfully enter in scale in Europe? And why does Ireland sit at the heart of that strategy? We'll explore these themes from the perspective of U.S. and international managers looking to expand their footprint across Europe. I'm joined by an incredible group of experts: Natasha, director at Irish Funds; John Bohan, co-founder of Apex Group; Sinéad Colreavy, partner at Ernst & Young, EY Ireland; and Geraghty, partner at K&L Gates. Thank you all for joining us. Natasha, I want to set the stage. Let's start from a high level. Why Ireland and why now?
So thanks very much, Heather. So maybe just to set the scene, to give people a sense of what Ireland is and what we have to offer. I think it's really important to call out that we service over 1,000 fund promoters here in Ireland. And that covers assets under administration of almost $8.4 trillion US. Ireland also provides a gateway for distribution to over 90 countries. We have 430 of the largest financial services businesses are hosted here. And, just to say that 17 out of 20 of the top global asset managers have Irish domiciled funds, which I think is a testament in and of itself. And then one of the key things that we are, really proud of is the fact that we now have 78% of all European ETFs are domiciled out of Ireland. So that's a huge number. And of that 78%, 96% of all active ETFs, which is a real growth area in the ETF space, are now are Irish domiciled. So I think that's also an important piece. And then, that just gives a little bit of a sense of the industry. And then also just to say that we are the third largest global domicile and the second largest in Europe, and indeed the fastest growing domicile in Europe as well. So I think they're really, sets the scene in terms of where Ireland is positioned and how we can, that we're really well placed to support the asset manager community.
Yeah, Ireland has long been positioned as a gateway into Europe, but that positioning is really accelerating. It seems to be over the recent years. John, when firms actually make the decision to enter Europe, it's not just for Guinness and golf, because you told me that's a really good reason. But the challenges really become about execution, especially around infrastructure and scalability. So what are some of the biggest operational or technology challenges that they face on day one?
Sure. And I think that's the key thing. Fundamentally, the industry is there, and everyone on this call represents both the legal side and the tax incentives, those reasons why Natasha were laying out in terms of breaking down the barriers for third-party managers to come into Europe. So you want to be able to provide a very easy route for managers to come in. Traditionally, and just by way of comparison to some of the other markets, the US market is a very cohesive, joined-up market. Europe, 27 different EU member states, and therefore it's breaking down those barriers. So when we have managers coming in, they're looking at the core barriers to entry, which is going to be the regulation. Can they tick the boxes to launch a fund in here? We have the third-party mancos. Distribution, how are they going to raise capital? As Natasha was raising on that point. And then integration into their own systems, because large US managers, Natasha obviously highlighted the market share we have on that. They have strategies all over the world. Ireland is one of those core jurisdictions that feeds the European market, allows them to access and raise capital in Europe. But in a lot of cases, they will have a hub in Asia. They'll obviously have large operations in the US. So it is collating all of that big data together. I think the two biggest, it's been a tough environment for the last 2-3 years for many different reasons. And really the key topics on the asset manager side that we come across is consolidation and usage of that data. So you've had the likes of Snowflake software and these other softwares that allow the usage of that data And fundamentally, it's been somewhat clunky and slow in trying to pull that together. AI is a huge yard step forward in pulling all that together. And that goes from both sides. We have the regulators around the world, obviously the European regulators that are able to use the data they're pulling in, but US managers or managers coming from different parties around the world can tap into that AI capability, use that data to go back and feed it back into their own compliance, into their own risk areas, into their own financial data. On the distribution piece, there's a huge amount we can go into here, but ultimately the future is going to be looking down the path of tokenization, digital share classes and tokenizing those and plugging it into secondary exchanges, which is really just going to expanding that base. And that's a whole different topic of conversation, which I'm sure we'll come to as well.
Sinead, from EY standpoint, a tax and structuring standpoint, John outlined some of these challenges. So what are some of the first things that managers need to get right when establishing in Ireland, especially if I'm, let's say, a U.S. manager doing this for the first time?
If you're a U.S. manager doing it for the first time, or with any kind of investment raising capital for investors, you're looking for certainty, you're looking for efficiency, and you're looking for reliability. And Ireland has all of them. And, efficiency, we make no apologies that we're a low tax jurisdiction when it comes to funds. So that certainty is there. It's been there for over 20 years, the 12.5% tax rate. Irish funds for US asset managers pay, there's no NAV tax. And that has been stable. We're a trusted, I suppose, reliable EU, OECD compliant. So, and that hasn't changed. And as I said, just no apologies for a no tax jurisdiction and full transparency. US managers also look to, I suppose, engage with a partner who is trusted. And one of the, I suppose, unknown nearly Ireland-US facts, I would say, we know St. Patrick's Day is celebrated in more US cities than anywhere else, but the US-Ireland tax treaty is the most globally relied upon US tax treaty. And I think that's saying something about the connectivity between Ireland and the US. And as Natasha said, it's that tax treaty that has led to the establishment and why Ireland is such a growth for the ETF industry.
Shane, from K&L Gates, a legal standpoint, in the U.S., where I sit, we work closely with the New York office, for example, and we partner with your office there. But Ireland has become one of the most established fund domiciles globally, as we've kind of set the stage here. But it's increasingly complex. Obviously, the EU regulatory environment is always changing. So what are the core, let's focus on like the advantages that Ireland offers as a fund domicile compared to other European jurisdictions?
Thanks. I think, going back to something that Sinead just said around certainty and efficiency and trust, is that Ireland's built a very reputable place for itself in the financial world in terms of the products and the range of products and service providers that it has. We have a regulatory system that is overseen by the Central Bank of Ireland, which is trusted as a global regulator. It has certainty as to the regulatory environment. We generally don't have any kind of gold plating from a European perspective. We typically take the regulations as they are written and the spirit in which they're devised within the European framework, and we adopt them without kind of putting an additional layer of gloss over. So I think from the efficiency or from the certainty perspective, that's there. We take a very clear view of what the regulations say. We have a very strong engagement between industry and the central bank and other stakeholders. So, managers, when they're coming to Ireland, can understand that, we have a very clear understanding of what the rules are, how they're dealt with, and how best to employ them. And then from an architecture perspective, we have some of the most flexible and user-friendly forms of fund structures available. So we have ICAVs, which are the corporate vehicles, which are heavily used by US managers in particular for, say, private credit or ETFs structures. It's a corporate vehicle. It's a bespoke structure. It's well regarded, and as I'm sure Sinead can speak to, it has the ability to check open or check close a box for US tax purposes, which is very attractive for US managers. And then similarly, we have a limited partnership structure, which is scalable. It is a tax transparent vehicle. So private equity managers or real asset managers in that space will be very familiar with, Cayman limited partnerships, Lux limited partnerships, Delaware limited partnerships, all offering the same things. And the ILP seeks to, place Ireland at the centre of those discussions as well, with a similar kind of arrangement. And I suppose the beauty of the ILP also, which is a bit of a unique feature of it, is that it can be established as, say, an umbrella structure. So you can have one GP with multiple sub-funds with the ability to host multiple vintages within the one platform, or, different strategies. So Ireland has all the regulatory tools available to it. It is a first adopter when it comes to new initiatives. For example, the LTIF 2.0, we implemented that pretty much straight away. We also had the central bank took a very practical approach from a regulatory standpoint and said, okay, well, we're going to provide, for certain categories of LTIFs, we're going to provide a 24-hour approval process. Again, regulatory certainty around timing, around delivery, efficiency and trust, I think has really put Ireland in a great space.
Yeah, and sorry, just to add and emphasize, and you mentioned it there at the end, it's speed and cost. It's been such a fast-moving environment from a market perspective. We've obviously fallen out the end of some very popular strategies. ETFs have exploded, in particular over the last 12-18 months. And because some of those tax advantages, we carved out our niche now, which is why you have the majority share. But the speed to market, managers in a lot of cases are able to deploy capital when it comes freely available because they see a niche, there's an arbitrage that they can take advantage of. So you'd mentioned that 24-hour approval process. So where you have these umbrella platforms and they're plug and play platforms, Heather, essentially, which allows managers to come in very quickly, basically launch a Quay fund on an existing platform, and you have that 24-hour launch where you've already been pre-approved by the central bank. You have a fund or a platform that's upfront. You can launch that next strategy within a day, and that's very unique. It allows managers to expand rapidly, make decisions quickly, and not get delayed. The biggest fear generally in Europe when we're talking to US managers is the regulation. Lots of arguments in terms of, in one way, we bolstered the reputation we have in order to carve out that surety for managers that we are a highly regulated jurisdiction. But we want to be able to kind of break down that red tape and regulation by allowing these. And the regulator has done that by putting requirements like that 24-hour approval process in place. So I think that's a key point, Shane.
Yeah, absolutely. But just to come back on just a couple of that everybody else has raised, because it ties into the distribution and why, you would select Ireland to be your partner in terms of distributing your funds and selling an Irish domicile product. So Sinéad has talked all about the tax benefits of setting up Irish structures, particularly for US managers. Shane, the same, outlining the structures and what that looks like, and our ability to get those authorized quickly. But I think sometimes one of the key things that we maybe don't touch on, or there isn't a level of focus on in the initial structuring discussion, is actually the servicing environment. So that, I think, is a really, really important element. And that's really the glue that binds all of the component parts together. So you have, say within Ireland, we have a common law jurisdiction, which I think is really, really beneficial and comforting to our US managers. It's something that they're familiar with. We also have, I touched on it earlier on around the size of our jurisdiction. We also have 20,000 employees based here in Ireland, which enables, so, you've got your fund that's going to be approved very quickly. If it's an alternative product within that 24-hour turnaround with the central bank. But we also have the capability within Ireland to be able to launch that. So we have the capability and the capacity, which I think is also really important. We've got
we're swinging back to Guinness and golf now.
We are.
But we're talking culture.
Yeah.
And I mean, I joke about that, but I mean, we had a Natasha will talk about Irish funds. We had an event which revolves around the St. Patrick's Day celebrations in the US, Heather, and Irish funds and our industry tend to head that direction to kind of promote that. But we had an event in Greenwich, a lot of asset managers there, and culture was probably one of the key things that came out. These are existing managers that have launched funds, and they spoke about that service industry support the community and the culture.
Yeah.
That is very much a collaborative and get it done approach. And, people want to do business with people that they get on with, they find it easy to communicate,
Yeah.
and they like. And, Guinness and golf comes into the tail end of that. When you've finished your meetings and your board meetings, then, there is a cultural connection there as well that people can enjoy.
Sinead, what should they prioritize from the offset aside from, those relationships in golf and Guinness? What else from a tax standpoint, if you want to pick up where John or Natasha left it, especially around investors and capital movement? Because if you're wrong, it can be really costly, right?
If you're wrong, it can be really costly. Yes. This is a well-trodden path in the US with the tax tree that coming in. The start point is important. So the structuring is important, and it's important to get that right. After that, we are, fully in legislation, talked about the connectivity and improving things and a rise in scanning. The ICAV and the ILP all came about from remaining competitive for US asset managers. And that, I don't want to get too technical either, but if we go back to our last finance bill and the changes, it's all about keeping that efficiency and low tax environment. And, bringing the connectivity and the community even to this group here, we work together to make sure that the tax remains stable, that we have that reliable environment, that we are not bringing in anything that will be detrimental or will cause upset or surprises for investors. Keeping that efficiency and neutral tax regime is really, really important. And as someone working in tax in this industry for the last 20 years, I can see how much hard work goes into maintaining that, and also kind of looking across to other jurisdictions. And it's no surprise to me that Ireland is the fastest growing fund domicile globally at the moment for all of those reasons.
Yeah, Shane, you want to pick up on that? Please, from a regulatory standpoint, how do firms think about navigating the complex regulatory environment? How should they?
Yeah, I think Europe is attempting to be a unified approach to most things. With the original UCITS directive, which harmonised the regime for the retail sector of the market. Post GFC, we had the introduction of AFMD, which kind of provided an overlay and a regulatory understanding of how managers should run and operate their funds within a European context. That has gone to UCITS has gone through various iterations. AIFMD has now gone through a second iteration. We're into AFMD2, which is due to take effect from the 16th of April next year, which again will harmonise the landscape further. It will introduce, for the first time in a European context, the idea of a common set of rules around loan origination funds, which, eliminates any kind of arbitrage between jurisdictions. It creates a harmonised level playing field where actually, coming back to the same topics we've been talking about already, efficiency, trust, and commitment to quality service will be as important as just the legal structures. So, I think from a regulatory point of view, on a European level, you will have seen that through various reports that the European Commission have issued, there is a push now within Europe towards a simplification, not a further increase in complexity, in order to drive a greater competitiveness within the European project for companies everywhere. And that includes, financial services. We've the Savings Investment Union, which is promoting the access of more retail money towards private market investments. So there is a real impetus from the European Commission and from Europe generally towards making things less complex, but ensuring that the safeguards and the guardrails are still there. So it's not taking down the guardrails at all. It's actually just making the process around the core of the business, making those more robust, but at the same time allowing the flexibility and the opportunity for growth, which is important. So from a US manager's perspective, coming into Europe, yes, it seems like it's a big lift, but in many ways, once you partner up with the right service providers, get the right tax, the right legal advice, and have the right boots on the ground, it is actually a pretty navigable clearly understood with very clear guardrails. And, I think there's plenty of people on this call who've lots of experience in dealing with these things, who've seen the success stories that come from that. I think, Natasha, we've about 165 managers here in Ireland who've actually put down boots on the ground.
Yep.
So that's a demonstration of itself. As to what
you
US
have the right
managers
team
will
in
do.
place, like you said, Shane. And John, did you want to pick up on that? The importance of having not just a fund administrator, but also from a tax perspective, from a regulatory perspective. All of those things are very important. And this group, for example, is kind of that complete team in a package.
Yeah.
Would you say, John?
Yeah, I mean, it goes back to, I suppose, the establishment and the unitization of the EU from a distribution perspective. It's a 30+ year since we established the first UCITS. There was a kind of a race for territory, if you like, from domiciles. So core domiciles is obviously Ireland, and then Luxembourg being the other. The cultural flows are such, as we spoke of, that the US manager was have a tendency to come to Ireland for those, obviously, the obvious tax reasons, but other cultural flows. But the key point here is the length of time that we're at this. We've been the industry running a very long time. So again, going back to the distribution point, when you come into Ireland, we'll take our own group, Apex Group, but we have a global distribution. So we have master agreements in place with over 400 different plus platforms across Europe. So there's master agreements. The client comes in, they can sign into that, any of these platforms that they want, and distribute their product. And then it's the same applies if US managers, which in a lot of cases want to distribute that back in the US. There are broker-dealer arrangements, chaperoning arrangements, wider distribution are already established. So it goes back to Sinéad's point in terms of that discussion at the very, very beginning of the conversation in terms of, what is your strategy? Is it going to fit into a UCITS or non-UCITS structure? Where is it that you're trying to distribute the product? Do you have your own networks, or do you need to leverage off another third-party network? So it's a menu to a large degree when you come into this jurisdiction, and you pick and choose what is going to work from you, what you want to do with your fund, or where you want to distribute, and then we roll it out from there. But there's nothing, you're not recreating anything. It is a cut and paste re-establishment of all of that, and very flexible in dealing with every different type of manager, be it the larger $1 billion plus managers or the more mid-range. We can cater for every aspect of that. So it is very much tied together. Some of the other key markets like the UK, the licensing around that we can tie into in terms of local management company license, or ACD. Same for Switzerland if you're looking at family offices, and then you're going regionally across LATAM, Asia, Middle East. But all of those we have tax treaties with. All of those we have established routes to be able to distribute. So it just makes it a very easy process for the asset manager coming in.
And I think, John, just on that piece, just very briefly, and Shane touched on it around SIU. So the European Commission is very keen to essentially unlock the deposits that Europeans have. So whether you're in Ireland, I think we have 170 billion of cash on deposit here in Ireland, huge, trillions in deposit across Europe. And really, that is an amazing opportunity for US asset managers. And Ireland can be seen as that gateway to accessing that volume of deposits that is available. And I think that's one thing that, it's really important that we highlight that the level of opportunity in Europe for those US managers, and that, to everybody's point here, whether it's from a tax perspective, whether it's from a structuring perspective, or indeed the people to help to support you to be able to do that. I think it's really important for US asset managers in particular, given we have a double taxation, just the scale of opportunity that is available in Europe to those US managers.
I'd just add to that, from this is as a K&L Gates position, we opened the office here in Dublin in 2023 exactly for this purpose. We have lots of clients who are US investment managers who are looking to set up their fund ranges in Ireland. We are here to support them and our US partners to deliver on that. And so, there is a real, I suppose, drive and desire for managers to use Ireland. And, I think firms like ourselves and others that have a foothold in the US and that have opened offices here are living proof that Ireland is a critical financial centre for both the asset manager and as an access point to gaining getting a foothold in Europe for capital raising and even deployment purposes. So I think Ireland is on the way up in that respect.
And Sinead, from an EY standpoint?
Yeah, I was just absolutely going to add to that. Similar, we are working very closely with EY in the US, and actually we have a US contingent coming over for golf, I will add, and Guinness, but also to meet the US asset managers that are here on the ground. And I think to what John was saying, like we are, and this format is great as well, like we are, there's providing confidence that Ireland is a proven jurisdiction for a gateway to Europe. It's not experimental. It's proven. It's kind of cut and paste the ICAV, the ILP, and it's just to get that message out there.
John, in terms of if you had a crystal ball in terms of trends, risks, what's next? I hear that, I understand Shane is saying it may not be getting more complex. There's a sort of simplification in terms of investors moving in terms of a gateway to Europe, a gateway to Ireland. What are your final thoughts here? And we'll go around and get everyone's take.
Yeah, I think that roadmap and simplification of how to launch a fund in Europe, distribute, and obviously Ireland, and we talked about that, Mary. So definitely, I see it simplifying rather than getting more complicated. The regulation will stand, and as I said, it's our job to break that down. Crystal ball, on some of these points were really raised on the call. We were talking about the retail opportunity, and Natasha touched on that. There's been an ongoing and increasing swing. The US, as in most cases, and trends are probably ahead of the curve on this, but giving access to the retail market to larger funds, strategies, opportunities, giving access to the retail market to private equity and illiquid funds is something that I see emerging then as well. So you have, it could be property, it could be energy, it could be farmland, and creating daily liquidity around these types of strategies is something that's happening. And then the natural progression, and this is your real 5-year plus market, is tokenization. So a lot of questions of why is tokenization and blockchain not taking off quicker over the last number of years. And I think we've been building the foundations to all of this. You can see the NASDAQ that are looking at tokenizing equities, and they will go through a 23/7 trading process, and that was live from March, beginning of March, I believe. So we are tokenizing share classes more and more. The larger groups, BlackRock's, Hamilton Lane's, all of these are adopting these tokenized share classes, and we got to build the markets. We got to build these secondary markets and connect all of those up. So all of a sudden you create a huge retail market, which from a tokenization, whether it's an app on your phone for that retail market to be able to access these things, and that's coming down the road, and that's going to accelerate that swing from retail capital to shift into those strategies. So that's probably the key trends emerging in the future. AI is going to drive that, of course.
Yeah. Natasha, any thoughts on AI driving the future of finance if you had a crystal ball at Irish funds?
I think I got the most difficult question of all, because who knows where AI is going to take us.
Right.
I think John's touched on the tokenization piece being the mechanism. So, that it's really important. And I think as an industry and as working with the central bank, we're really trying to drive DLT forward, the tokenization piece. We will see AI being adopted by firms. It's already being adopted. And I think it's something that we need to embrace because, that change is coming. It's really important that we're seen to be innovative and advancing there. What I would say is that, there's a balance. So there's the innovation is really important, and we would very much see ourselves as an innovative environment. But we also have a very robust regulator that sits on top of that appreciates the importance of the guardrails and the regulatory environment to support that innovation. And I think that's a really important piece around AI, that we have the structure and the discipline to be able to apply AI as we move forward and to see the positives around AI and what it can do and how it will help us to innovate and grow our industry.
Sinead, what are your thoughts on AI and the future of finance gateway to Ireland, especially when we talk about US managers?
Well, everyone keeps telling me my job is going to be redundant with the coming of AI.
Whatever you do cannot be replaced by a robot. All of you are irreplaceable.
I 100% agree with that. So I see AI adding value to what we do. Tax is an integral part of this environment, and why Ireland is chosen. I don't see that changing. I would love to see tax driving more. So tax being involved more in policy and where we want to go, and using tax as that lever, either locally, domestically, and internationally. And like I know I've said it a number of times, that Ireland-US treaty is a really strong treaty and a real basis of our connectivity. And I see that just getting stronger as this industry grows.
Look, I think AI has a huge part to play. There's so much that can be done with it in terms of driving efficiency and taking, operational processes that are, manual and so forth, and delivering those in a more automated form. I think that's good for everybody. It allows everybody on this call to do the higher value work. So I think that there will be an expectation, I think, that you will use AI as part of your processes and so forth. But to Sinead's point, I don't think we're all going to be made redundant. I think it's going to be an overlay. It'll always be, there's always a trust and verify kind of approach to this. But we don't take AI for granted, but it's definitely a tool, even within law firms, as you probably know. The use of AI is starting to feed into a lot of the processes that we have. And no doubt a lot of the asset managers are starting to do that too. Even if people don't see it day to day, they're sitting at their desk, it's running in behind, it's doing all the analysis that a lot of people would expect. So I think you're only going to see that go one way.
I think it's important to note the fact that AI is going to change front to back office. So the how the asset manager works and makes their decisions in terms of the analysis work that they have to do, how quickly they can deploy trades, so these arbitrage strategies, I think, will start emerging off the back of that, of being able to access and dissect hordes of information so much quicker and take advantage of these opportunities. So that's one aspect of it. And then there's obviously the risk side of things, that when you're deploying data into these AI programs, that AI is going to make the same mistakes that because it's computer driven. It's like the old adage of how you use AI. And the guy says to his AI chatbot, can I eat this mushroom? Is it edible? And chatbot said, yeah, of course it is. And he eats it and dies because it's a poisonous mushroom. And then AI says, would you like to know basically what type of poisonous mushroom it is? But he can still eat it. So it's not about asking the right questions to AI to get the right results, I think, is these kind of key areas. But we are deploying it across our group as our peers and competitors on a very wide basis. But it goes back to, everyone was making the point in terms of the strategy, the importance of the strategy, the approach, how you deploy it, understanding the risks, having full analysis of how that's going to work at the end of the day, and then the huge savings. And I think one other area that clients are always worried about is transfer agency, the length of time it takes to process subscriptions, redemptions, AML, KYC. So where we would have taken, I don't know, an hour and a half to kind of process a subscription or redemption agreement, you're now doing this in less than a minute. It's extracting all that information from the document, uploading it in, and then you just have a human in the loop at the end, which is just a maker checker, just validating some of that information. So it's accelerating the speed to that, which in turn is driving online technologies that allows investors to come along and see where they are in the process. So the speed at which all of this is going to happen is going to facilitate, again, the retail nature of things, and again, just the coherency of the market in general. I mean, ultimately, blockchain, when that comes down the road, we're going to have real time NAVs that are pulling prices from the different markets, calculating the NAV in real time. So you're talking about that crystal ball, but like every minute, every 15 minutes, you're going to have a real time NAV that you can trade in. And that's the direction of the market.
Yeah, I really appreciate the partnerships, Apex Group, EY, K&L Gates, and Irish Funds. I think the key takeaway is that entering Europe isn't just about access. It's about getting the structure right, the infrastructure, the strategy right from day one. And you need a team in place to do that. This is clearly a good team. And Ireland is a dominant player in the market for years to come. That's very clear. So thank you so much for joining us today. We're excited to keep the conversation going and to help you unlock the future of finance today.
Thank you for listening to The Single Source, brought to you by Apex Group. If you enjoyed today's conversation, be sure to follow and subscribe.